This is how I cut a clean 1-to-2 risk to reward ratio trade on Solana. Without wasting much of your time, let's dive right into it. So we can see here we had an area of supply at this point, a very strong supply. I wouldn't want to tamper with my chart because I still have some markings for this week trade. So I took this trade yesterday and I said, okay, let me just quickly analyze it and show you guys how I took the trade. So you can see here you have the area of supply, price fell strongly to this point, and then we had a new area of demand at this point. So I marked this area of demand, which was like the end of the sell. Now if you look into this place, you will see that this is a fair value gap, right? I removed it because it has already mitigated it, but let's draw it. Let me draw it back for you guys to just see what I was looking at as at the time, right? So this is a fair value gap here. So now we had an area of supply, a very strong one, a fair value gap formed, and then a downward push. Now we had the last sell before the buy, which formed the new demand zone. So at this point, I was looking forward for price to coming back to test this supply zone and then definitely pushing downwards again to this demand zone, which if this demand zone would have held, I could even take it long back up, right? So, and as anticipated, price started going up, and then it tested this fair value gap at this point, right? I do not trade with fair value gaps. Some people do, but I personally don't, especially on the lower time frame. When I'm trading on the lower time frame, fair value gaps tend to break through, like it usually breaks through the fair value gap. So I do not want to be entering at the fair value gap point, but it's respected much more on higher time frame, like the 1 hour, the 4 hours, right? But this is a 15 minutes time frame, so I used a combination of 15 minutes and 3 minutes to take this trade. So you can see as at this point it's mitigated this fair value gap and automatically pushed downward, respecting the fair value gap. But some people will have entered here and tried to short, but I didn't. I waited because I want to always enter after a reaction at the actual zone, so which is the actual supply zone or the actual demand zone. Now you can see price came here and tested this supply zone. After it tested this supply zone, the next candlestick that formed closed on a low, signifying that, right, it is respecting this supply zone, and then price dropped off again. Now at this point I was happy to take a short because I can see price has respected that point. So let's draw a line here so we can excuse me, so we can see how it happened on the 3 minutes time frame, because I used the 3 minute time frame to look for my entry. Yeah, so as you can see on the 3 minute time frame, this was the reaction in the supply zone. Now, like I used to say, I usually look for a change of character to enter my trade. If you've been watching my previous strategy videos, you always know that I wait for confirmation, then go to the lower time frame, the 1 minute, 3 minutes, you could use the 5 minutes, whichever works best for you. But on this trade I used the 3 minutes to look for a perfect entry. So now you can see here, this was our fractal high, right, at this point where price tested this supply zone. So it gave us our fractal high, and then this is a change of character to the downward side of the 3 minutes time frame, signifying that we are now changing into a bearish trend. So now what you want to do is you want to mark this fractal high, which is going to now serve as your stop loss. Then you want to enter at the change of character. Some people enter at the exact change of character line, but I like to enter at my sniper entry, so that's the last buy before the sell here. So let me do this here. I'm going to delete this now. So set your stop loss at the fractal high, which is this point here, and then set your entry at the last buy before the sell, targeting a 1-to-2 risk to reward ratio. Clean and easy. You could target 1-to-3, but I just, one thing about the market is you need to know your goal before you enter. You know what you're looking for. Okay, I got this goal, I just have to get out, and then that's it. You don't want to capitalize on all the whole move and then end up getting bonds due to greed. Just go in, quick out, and then you've made your money for the day. If you're swinging, that's a different thing, but this was a quick trade I wanted to take, a quick 1 to 2, right? Because I personally say do not take any trade less than 1 to 2. If you're taking 1 to 1, well, that's on you, but it's not really a sustainable way to trade, because you want to be making more than you are losing in the long run. So as you can see, the thing now about this is I set my limit order at this point, right? So this is where trading will test you, and you need to be patient in your trades. Why is that? I set my limit order here, and then the market kept moving. It came close to my entry, pushed down, went up like that, and as at some point it came close to my TP. But you just have to believe in your setup. If you miss the trade, you miss the trade. If you have a specific pricing which you want to enter, never ever try to chase price, right? It came close to my entry here. Okay, let me just buy at market price. It's like it's going to leave me. No. Okay, those few pips always serve as what will help in paying your commissions and all. So you do not want to chase price. Just set your limit order and then allow the market to do what it wants to do. So after a little bit of consolidation at this point, then we had an aggressive buy to the upward, triggering my entry here, and you can see the supply zone was very, very valid, because on the higher time frame it respected it here, as you can see. So immediately it's pushed downwards, and then boom, within just 1 2 3 4 candlestick, is the third candlestick, and then I was out of the trade. Quick and easy 1:2. So there we have it at this point. So it's as easy as that. Then I was looking forward to taking a long again at this demand zone, but as you can see, price broke through to the demand zone and it didn't hold. And take a quick look at this, at the demand zone. You can see it broke through. There was no change of character to the upward side. So as at this point, I already left the market, because when I saw a break of structure, break of structure to the downside, break of structure to the downside, break of structure to the downside, right? I didn't just want to take this trade anymore. Yeah, I could have still said, okay, let me take a long like this. This is just a quick analysis for you guys here. Set your stop loss at this point, set your entry at the last sell before the buy. But this is just too much in terms of risk to reward ratio. The stop loss is just too wide. Now look at this. If you are selling it back to that supply zone, it's going to be around a 1.58 risk to reward ratio trade. I do not take such kind of trades, because that risk to reward ratio is too small for me. It's looking like it's going to hit TP on that. Definitely it will, because stop loss at the fractal entry here, and then you want to long it back to the top. But I personally wouldn't take such kind of trade, because the RR is below standard for me. But that's how you can trade it. All right, you can trade demand and supply. So you see the key things you need to look for is marking the supply zone and marking the demand zone, and trying to trade off in between them, looking for a reaction in those zones. When you find a reaction in those zones, and please always make sure that the candle closes first before you make your decision. Then you can come to the 3 minutes time frame, the 1 minute time frame. I personally find out that the 3 minute time frame gives you much more better confirmations than the 1 minute, because the 1 minute can give you so many change of characters that if you are not really familiar with trading supply and demand, SMC, you might get confused. So 3 minutes is much more preferable, and that is it, guys. That's how you can trade supply and demand in a very, very easy step. I'll catch you guys in the next video. Cheers.